Hey everyone, welcome back. Today we'll be taking a look at NIO, specifically the NIO shares. Now we need to have an assessment on the NIO shares. Is it a good time to buy the NIO shares or is it a bad time? Why now is not the time to buy NIO stocks? NIO stocks could continue to pull back as multiple headwinds persist, while the NIO company has been breaking grounds in terms of deliveries. They just set a new delivery record in November, building and delivering over 14,000 vehicles. In the 11 months so far in this year, NIO has built and sold over 106,000 vehicles, I believe. Very impressive by the company. So it is curious why the shares are not doing particularly well right now. Now, don't get me wrong, a few days ago, in fact, last week closing price, the NIO shares actually recovered quite well. But given the difficulties within China right now, there's a lot of difficulties. That's going to cause a lot of problem for NIO. This makes investors wary. This makes investors worrisome. And investors essentially kind of retreat in these moments. Instead of investing, they're usually more cautious. They're more cautious and they usually choose to invest in something else, a different asset that's perhaps safer. But my reason primarily is because I think the NIO shares could become even cheaper in the near future if the issues continue to get even worse. Plus, not to mention, it's coming to the end of the year. The new years will either bring good things or bad things for the EV market. If it's bad, NIO shares will definitely be cheaper. And the way it's looking right now, it's looking that like it could get a little bit worse temporarily. Especially because right now the entire market is not necessarily bullish on SPACs or EV stocks anymore. Not like they used to be, not in 2020 or 2021 when the market was just super excited about SPACs and EV companies. Right now, the market has become very cautious and they're proceeding with plenty of caution. So NIO stocks could remain under pressure due to China's unpredictable COVID-19 policies. It could get worse and people's life are at stake, to be honest. It's not just about NIO. This is one company. But there are people within China who are going through seriously the worst time in possibly the last 20 years in their history. You know, it's really difficult right now because there's so much casualties. And many companies are trying to go to China right now because that's the next stage for EV development. But I've got to say, the timing couldn't be any more unfortunate. Now, despite NIO's revenue growth, investors should observe the company's widening earning loss. Investors can choose to delay any purchases of NIO stocks until conditions improve. Given the fact that NIO stocks is down year to date, eager investors may be tempted to take a long position now. However, this is actually a time to exercise caution. For one thing, China's on and off lockdown and the pandemic, the virus, the policies could throw a wrench in the works. Besides, NIO's financials are less than ideal, especially when it comes to the company's profits or lack thereof profit. And at the core, NIO is a Chinese-based company. At the core, they are Chinese-made. They are Chinese-located, Chinese-developed. That's their main market in terms of development, manufacturing, research, sales, everything right now. They're slowly developing their stations in Europe and branching out into Europe and creating spaces, locations to sell their vehicles and charging stations and swapping station as well. But this expansion is nowhere near stability, which means that it's not going to provide many investors with a lot of confidence that the European market could somehow balance the scale for the NIO company. Not yet, not for the next few years. We'll see how NIO does in terms of next year, 2023, in terms of development within Europe. I think they're going to do terrific, but it's yet to be seen. Not to mention there's plenty of other EV companies out there that are competition for NIO, such as Polestar, Tesla. Not to mention the big brands such as Mercedes, BMW, Audi. They're all trying to catch up. NIO is contended with multiple of these challenges. So there's the prospects of having to compete in a fierce EV market, especially Europe. The European market is not NIO's home turf. It is primarily European cars, primarily dominated by German-made cars. NIO intends to have a piece of this market, but I think in order for them to have a piece of this market, they're going to have to go to the similar route that Tesla's gone. Building a factory in Germany, great location to just ship out many hundreds of thousands of vehicles to the rest of Europe. And a European factory is definitely on the mind of the company. They want a European factory for sure. And right now, Germany is certainly looking like the place to do it. I don't think many companies are choosing the UK because it's an island at the end of the day. It's very cut off to the rest of the wider European markets. While if you build somewhere in Germany, if you build somewhere perhaps in France or even Spain, I don't know, but maybe even in Italy, we don't know. But these locations, they give you so much access to so many other European countries without going across water, of course. And that makes life easier for the company. Now, NIO must deal with a government that's not always business friendly as well. You got to keep that in mind. The Chinese governments are always very strict. They're very strict, and not to mention how the country works in terms of the relationship the government have with every company. It's a strange relationship, something that very few people out of China will ever understand. But regardless of where you're located, if you're invested in NIO, the company's problems will become yours. And by the way, let me just remind everyone, this is not financial advice. Now, there might be a time to take stake in NIO at some point in the future, but for the time being, a watch and wait strategy is entirely appropriate. And keep in mind as well, starting this year, NIO's shares actually started at $33. Recently, they've declined to just around $12. Keep in mind that just because a stock has lower price doesn't necessarily mean it's a good value. That's true. And just because a stock has a extremely high price doesn't mean that it's overvalue or necessarily a bad value. It all comes down to the real company. If you think the company is a well-structured, managed, and valuable company, then it shouldn't really matter what the share price is. In fact, some investors, the best of the best, such as Warren Buffett, they often try to avoid seeing the share price at any given time when researching a company because they don't want it to affect their decision making. They look at the company and then later they choose to look at the share price. And that's genius because then you're not conflicted. And then you can assess if the company is actually overvalued and if you want to wait out the market to buy at a cheaper price. That's what Warren Buffett does all the time. Now, like I was saying earlier, NIO has recovered last week and it's done so pretty well because in the last month, the price has been low as $9.20. It's now at $12.69. So that's a damn good recovery. It's such a good recovery that more analysts are starting to put out $20 plus price target for NIO. And I'm not surprised at that information in any way, seriously. It was expected. It's what the media does. But to see the share price recovering slightly, having a positive momentum, this is good. But if you look at the wider EV market, everything is in red. XPeng is in red, Li Auto, Tesla's in red, PSNY, Polestar, they're in red. PSNY has been gaining a lot of momentum, but lately it's been losing that momentum, seriously. So once again, ladies and gents, do not be surprised. It's not just NIO who's being affected, it's a lot of different companies. Polestar vehicles are also manufactured in China. Tesla's been affected, they also have a manufacturing plant in China. Apple has been affected as well. They manufacture in China as well. There's recent news that they're looking to change where they manufacture their phones. Are they going to shift from China to India? There's definitely other options, but right now, China is the best option for Apple. But that is it for today's video. Just wanted to share with you that it's not just NIO, it's the entire market that's going for a difficult time. And despite the negative news, despite all of that, Apple is still trying to stay above water. They have been volatile in the last month, that's for sure. November the 9th, they were $133 cheap. But they are trying to stabilize. They are trying to gain positive momentum despite the negative press. But that is it for today's video. Thank you for watching and I'll see you in our next video.